And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you bright and early from Westlake Village, California. Getting up before the markets do. That's what I got to do on days like today. Major economic events to talk about, including a good old dump party here near World War III event. And, yesterday we talked about a dollar reset 4 weeks ago, actually. In fact, 4 weeks ago, if you've been following on the channel on the weekly time frame, we called it out, in fact, based off of this candle right here. We had multiple drives of bearish divergence on the weekly time frame, hidden bearish divergence. That is when price is making higher highs, right? And the RSI is making lower highs. Very powerful time frame. And we said the first target was the 21, but put in this warning signal right there and said, hey, any kind of a closure below that level, likely heading down to that green 55, or in fact, I think this area right here, 105, 106, we said. And I was thinking it would hold there, but it looks like with inflation numbers coming out cooler than expected, we had CPI and PPI both come out cooler than expected. Good job, Mr. Powell. That is more in line with dollar heading down a little bit more. What else has been going on over the past week or so? Tomorrow we've got another jobless claims report, but here's what I find odd, and this is what I was going to point out on the weekly time frame. 4 weeks down for the dollar, actually a 7% retracement, 7.5% retracement on the dollar. And what do you see on NASDAQ? 4 weeks of up, and from the bottom to the high there, 13% on NASDAQ. The S&P probably got it a little better, right? 13% on the S&P, and the Dow Jones got it the best. Played out a really nice bounce. And looks like could be coming in for a little bit of a double top here. Again, we talked about this falling channel. Need to see closures hold above here. If we drop back into the channel, then looks like probably the bottom side of the range is going to get hit. And where do we know? Where do we kind of get confirmation that really the bottom side of the channel is going to get hit, and we'll probably have a new low? And as you can see, actually, we got regular bearish divergence. I believe if we confirm this as a local high, let's actually see. Well, this is a higher spike high than this spike high. So this isn't confirmed yet. And certainly from this pivot right here, we're going to have two drives on the weekly time frame, which would be probably good enough for a shot to the 618. If we lose the 618 at 3,907, not going to be looking good for Mr. Dow Jones. All right, that's it for that one. So again, 4 weeks of up for stocks, 4 weeks of up for stocks, and then we had 4 weeks of down for the dollar. And what did Bitcoin do? Well, the last 4 weeks, we had 3 weeks of up and 1 big week of down. And the weekly time frame is a very powerful time frame. We did take out this wick at 17.5, and just getting a little back test on this wick. As you can see, price action does like to do that. Didn't quite get there at 17,631, which was kind of like the bounce target from, I believe, yesterday. 4-hour time frame, but we'll get into that in just a minute. So jobless claims report tomorrow. We'll see if Powell's doing his job. Inflation expectations were also reported this week. They were up. Consumers expect inflation to go up. That's not necessarily good for Powell. And the Fed does continue to say they're going to do whatever it takes to get inflation down to 2%. And of course, again, we got the war in the background, which is a big kind of exclamation mark. Potentially another black swan type of event could easily happen out of that. So be watching out for the news on that. Stock market sold off initially, but then just bounced right back at the news that, hey, it was just kind of an accident and Russia had no intention of sending the rockets over there. So let's get into the meat and potatoes of this analysis, because we're all looking for the big momentous move and momentous play, as Bitcoin has been on the shorter term time frames, which they're just slightly turning down here. Here's on the hourly time frame. We've just been hanging around 16.9 for the past, 48 hours. And looks like it's finally breaking down on the hourly time frame. Could not get it. So, and that's what I was going to point out as well, is as stocks rallied yesterday, Bitcoin had a dismal bounce, I would say. So it didn't show any signs of real strength. And that was a bit concerning, and potentially, next level down 16,270. I would say, on an hourly time frame, 16,230. Probably going to revisit the lows here, and then the question is, are we going to break the lows? Additionally, on the 4-hour time frame, momentum is crossed down, volatility starting to head up, and would have, several drives of hidden bearish divergence, which was confirmed on the last 4-hour closure. So we got 1, 2, 3 lower highs, and then 1, 2, 3 higher highs in RSI. Stokes crossing down. Pretty much a textbook play here for a shot down at the bottom side of the range. And the question is, bounce or not? Bounce or not? So short term, 16.1 in the cards on the 4-hour time frame, as long as we are closing below, call it 17,000 bucks. Pressure is on to the downside on the 4-hour time frame. Okay, daily time frame here. Daily analysis. If we do confirm any kind of a bearish engulfing candle, will not print bearish divergence on the daily. Let's see. That is a lower high. Yet it would just be another lower high and a failed bounce. Stokes are crossed up above 17,245, and volatility is getting up there. Hasn't maxed out yet like it has in the past. That's typically what you're going to see in the momentous moves. And back onto the weekly, something I did want to bring up is, we were expecting a pretty big move. The average move on a weekly time frame is somewhere between 40 and 50%. Once we get expansion off the lows, which we are beginning to expand here above 20 percentile, and I'd say the move is in full force. But the point I was bringing up here on the Bollinger Bands, we got extremely tight here. We broke below the bottom side Bollinger Band, and that would imply a move down to a minimum of this target right here at about 12,610, in my opinion. Again, not financial advice. I'm not a financial advisor. And the totality of the move, I believe we are, 25% in. So I'd expect to move anywhere from 30 to 40% minimum off of the expansion of this volatility. 30% puts you at 14.5, and 40% puts us at 12,500. And I do believe that a bit of, if we do head down to some of those targets, I do think that 14.5 is in the cards as well. But if we do head down there, I imagine it's some kind of black swan event. It seems like we're just waiting for the next shoe to drop in the industry. Lots of FUD out there. And, the moral of the story is, definitely want to just follow along the channel. And the next thing that we're going to be looking at is how to judge when a macro low is in. And there's pretty much 4 or 5 indicators that I use that identify, hey, here's the macro low. I do believe a potential bottom is going to be put in soon, but I don't think that it will necessarily be a macro low, meaning we don't revisit that low for, at least 12 to 18 months. Okay, so I think that's it. We went over the weekly. So the weekly, the Bollinger Bands were just squeezed at an all-time, low volatility. We had extremely, extremely low volatility. And my point is for us to only get a 23% move, that's like a daily time frame move, right? A weekly time frame move, and you would expect the price to go in the direction of the trend. Weekly moves are 50% on average. 50% puts you down in that $10,000 range. What else do we see on the CMEs? We are crossed down as long as we close the week. And we will remain down. This implies a target down to 13,000 bucks. So I know there's kind of a lot of, at the same time, there's a lot of FUD. There's a lot of hopium out there. I'm personally kind of reevaluating, are we going to bounce or not yet? I can say I have a good, healthy amount of I don't know. So in those areas, typically it's a no trade zone for me. So I want to see some confirmations of a bounce or not. And so do I believe pressure is on to the downside? Yes. And I guess what I am going to look for is the daily time frame. Pretty much a daily, above or below here is probably going to get the next decent move. And there's a threat of a bounce up to about 18.3. We could easily retest the 18.3, 18.5 region. And I'd mediate that with the 4-hour closure above, call it 17.5. Above 17.5. Keep in mind the first pass on the green 55 is, after being away from it for a long time, is typically a sell. And that's in fact what XRP did, I believe, on the 4-hour. Yeah, so having a bit of a stronger bounce than Bitcoin. XRP looked good, but looks like it is putting in a bit of a double top. And we'll have multiple drives of bearish divergence. And it's all but confirmed, in my opinion, based off of that closure. But if you really want to be conservative, you could wait for a closure below 36.72. Not 0.3672, and that should initiate a target down to 33 cents. Again, probably going to do whatever Bitcoin does here. And wrapping it back up on Bitcoin. 13 minutes into this video. I'm trying to make it short and sweet and kind of get all my thoughts out here, how I'm preparing myself for the day, and just looking at, again, NASDAQ, S&P, and Dow all down a bit today. They've had some major rallies, so might be time to cool off for them. And Dixie here bouncing off the purple 200 on the daily time frame. Any kind of a daily closure back above here is going to, head us back up to this green box, and then it's lower high or not. Dollar has been absolutely creamed. So if the dollar does bounce, I've been saying dollar strength is going to really probably hurt Bitcoin. Another one. Okay, what else we want to take out? The bond market. The bond market. Bond yields have literally been pulling back as well. And did we hit the $5 target? Nope. Close enough is close enough. We did not get up there on the 10-year U.S. Treasury bond yield. And the 30-year didn't quite get there yet. So everything cooling off, providing a little bit of a relief rally in the stock market. But I do believe reality is going to set in at some point, and everybody's going to go, wait, the Fed said they're going to tighten. Wait, inflation's at 7.7%. that's still really high. It's far, far away from, 2%. So, the dollar is still macro bullish. On the monthly time frame, trend has not changed. We're making higher highs and higher lows. Now, the problem is this could take 6 months to play out, 12 months to play out. This dollar speed moves that we've seen is not normal. That, when the dollar does 20% in a year and then it has a 10% pullback, it is what's called a corrective bounce. And that is what we are seeing here. The monthly Stokes are crossing down and volatility is going to cool off. So it's a mean reversion bounce. So we could have some time where, the dollar just kind of sits out here at, these higher levels. We'll have to see what the other currencies start to do as the dollar pulls back. As you can imagine, the Japanese yen and the pound have been rallying over the past couple of weeks. Take a look at the yen over the last month. And it looks like the yen has some more to go. So very similarly, 9 exponential. The pound already got there, and the euro, it's already there. Brazil has been holding up like the dollar pretty strong. Okay, and it looks like tech stocks are starting to rally this morning. So a lot to be expected over the next couple of days. I'd say, still in for a big move, another 20 to 30%. You would expect price to go in the direction of the trend. And 2-day Stokes are still crossed down here and will remain crossed down below 20,700. And then, hey, credit to Mr. Crown here on this one. The 5-day volatility expansion is coming up today, and the pivot is at 16,800. Very important pivot today. We'll be closing in the next 10 hours, and volatility has already begun to expand off the lows for the 5-day signal, which again is a 40 to 50% move. 40 to 50% again would take Bitcoin. 40% is down to about 12.6, 13,000, and we can, revisit the 50% from there. So really, 5-day closure below this wick, that's where the next move is going to start. We will have another 5 days on this candle, so it all depends on how this candle closes today. Let's hope we not get any bearish news today, and let's hope for a good jobs report tomorrow. That's it for today, guys. I hope you have a blessed and highly favored day, and we'll be seeing you soon. Take care.